Hi everyone, and welcome back to the Roasters Wrap powered by Green Square. My name's Caleb Holstein, and this episode is from a conversation we had in late 2024 with Sebastian from FarMore Coffee Importers, who specialize in Colombian coffee and importing from Colombia. It was an awesome conversation, and Seb is a wealth of knowledge about everything that's happening in Colombia and some of the new drivers and what he's seeing happening coming into 2025. So really interesting for us to see this and understand this conversation. We go on a bit of a rabbit hole talking about some market dynamics and price drivers from new emerging markets. So it's a pretty interesting one, guys, but that's all you need to hear from me. Let's jump in, meet Seb, and check out everything that's going to be happening with Colombia in 2025's harvest. Enjoy. Thank you very much, Seb. Thanks for joining us today, dude.
Well, good. Thank you for inviting me to this, Caleb. It's a pleasure to be here with you.
No worries, mate. Your scenery looks much nicer than mine, bro, for everyone watching on the video. But what I was going to start with, Seb, is maybe you could just introduce everyone who may not know you or may not know FarMore. Could you just give us a little quick intro into yourself and the company?
Sure. So I'm Sebastian Farias. I'm the co-founder and CEO of FarMore. And what we do is we're a big corporation that focuses on representing real coffee farmers, small coffee farmers, and we foster direct trade amongst farmers and roasters here in Australia and some other parts of the world too.
I'd love to know, Seb, and I'd love to be able to share with our audience, what are some of the things we've learned from the most recent harvest period in Colombia and looking forward into 2025 from a Colombian coffee production point of view?
Well, it's very interesting. When it comes to volume, we haven't been that far on predictions, but as you might know, what's actually affecting production per se in Colombia is that we don't have established production anymore. A lot of farmers, what they tell us is they have continuous production almost through the year, but in little amounts. Is that good? Is that bad? I don't know what to say just yet. So it's there. We're in the middle of it. Some of the regions is finishing, some of other ones is starting.
So maybe as an explainer for roasters, the one thing to understand, I guess, with Colombia and what Seb's saying there about the production continuously happening is what you see traditionally in other coffee producing markets like Brazil is there's a big harvest time and there's a main harvest time where all the coffee is produced or harvested at that period. So you can get these kind of reports like we've seen this week predicting what will happen in that very tight period of time. Where with Colombia, there's a range of fly crops in the different regions, in the different microclimates that allow coffee to be consistently getting processed and produced. Is that correct to say that?
That is correct, yes. And also gives us the ability to be very flexible and play almost with the market at every single moment in time.
Yeah. And I guess that's one of the unique opportunities that the region of Colombia and that region of the world can provide with that consecutively harvest periods and things like that.
Correct.
Awesome, man. So obviously you've been working in this for some time, bro. I'd love to know from your perspective, what have been some of the biggest learnings out of Colombia or things that you've seen recently from a production or from like an exporting point of view that have maybe surprised you or that are really interesting that you think roasters should be aware of?
Basically, is how we see price here. I don't know if audience here watch a video that I just posted recently on Instagram, but I was clearly deconstructing easily how price is. For instance, today we're sitting at $3.17 in the market, right? That will make it up to almost $7 USD for your base price in a kilo USD. And remember, guys, that we're talking from Australia. Our dollar, unfortunately, is not performing
63
very well.
cents.
Correct. So it
sitting
makes it even worse, meaning that your base price for Colombian coffee, it's sitting around your $13.50. It's actually $11. Just hold on a second. It's actually $11 base price, but you haven't departed the country. And remember that is commodity coffees, right?
Correct.
Now, one interesting thing, and obviously you can see an indicator of price in any source. In fact, the Coffee Federation of Colombia, it's on point every single day. They make the translation for what it is, the even internal purchasing behavior, and they set price, right? But let's think of something. And I want to split this into commodities and specialty, right? So we're just setting the base on commodities at 11 and you haven't departed, but you haven't even bought the coffee in Colombia. And what's happening is, come on, people is smart. So if there is a base price, and today the base price will be 11 Australian dollars, wherever you want to buy, who's going to sell for that, If that is the base. In fact, all of the farmers are putting premiums. In fact, the FNCO is also giving premiums because it's at this very moment, it's out of the interest, especially for the big houses, to acquire, no matter what, biggest quantities of coffee. It's a game of stock, right? And when you're pushing for stock, why? Because it's a short-term gain, right? If I'm the one who's got the biggest amount of stock right now and the market flips just by a couple of cents, I'm minted, right? So it's fascinating because, as I said, people think of a reference, but the reference is just an illusion. Now, if we're talking that we set the separation of commodity and now specialty coffee, which is what I love to play with, I'm guessing, let's just guess that one on a specialty coffee that is hitting around your 84 points and you call yourself a specialty coffee roaster, you cannot imagine to pay less than 25% on the base premium. And remember what I just said, the base premium is not the base, it's always going to be higher. Right? So you're thinking, oh, I'm running a specialty coffee house. I just want to get the base 83s in regional Colombia. Well, guess what? You're going to be seeing 1350s closer to 14. And you have not departed the country. We just got to bring it here and clear customs and whatnot, which brings me to the other problem that we've been facing. And this is multiple disruptions, multiple docks around the world. Colombia in particular, we just have a container landing over the weekend, which I'm very excited about. Only people having Colombian stock at the moment in Australia, but those are really good news. And I wanted to touch base on that because with the team back home and obviously here, we knew it was coming to December. We knew a lot of people were needing coffee, and we try our best when it comes to freight rates. I paid a premium. You wanted delivery in 30 days and whatnot. And it didn't happen. No matter how much effort we go through, dogs, you cannot control that, right? And remember that this year we had strikes almost in every major port across the globe, right? Look, and that resonates to these little countries. You know, we're affected. Everything's linked.
I think that's a great point you touch on there. This is when we talk about it, and a lot of our audience here would have probably heard me shouting about the perfect storm. We have these conversations where it's very easy when the market hits these record levels or we break these thresholds to understand that, oh, okay, well, the price is high, the supply chain is quite delayed and dysfunctional at the moment. The ability to move product efficiently is not there anymore. It's extremely costly, time consuming, and that is incurring more cost the longer it takes to move that product and the delays and things like that. So that's another part of the storm. We're then having weather events in certain producing countries and the challenges that those weather events are producing as well, where these are all coming together at the same time. That is why we're in a situation like this. So I think that's a good point you touch on there about understanding that when we talk commodity price and commodity conversion, we have to remember what our quality basis is that we have had the luxury of consuming previously. Because we have not, in majority cases, and a lot of the people who will be watching this, we have not been consuming commodity level coffees. We have been consuming well above that commodity level. And there was a rhetoric a few years ago, and I think you might remember this, where some roasters were like, we buy this much percentage above C market. I would love to see if they're booking contracts today if they keep that percentage above C market, because it's very easy to say we do these things when the market's low. It's very hard. Oh, we buy 200% above C market. If you're buying 200% above C market today for blenders, you're paying low $20 AUD per kilo for blenders in a market where we've trained cafes to expect $20 a kilo wholesale. Yeah. So we're in a momentous shift right now in the Australian industry, but also globally, because these drivers are changing. I think we're experiencing it to a heightened level here in Australia because of certain factors that we've experienced previously about the stability we've had, the oversupply, the ability to undervalue the product as well. We rank very low in the prices we charge to consumers for specialty coffee in comparison to other places in the world. So these challenges are all compounding. And obviously, coming back to the point there on Colombia and the learnings is this isn't a thing that's happened in the last 7 days. This isn't a thing that's happened in December when the market went crazy. These are conversations that I know you've been having with your customers and your network as well. This entire probably 18, maybe 24 months. Is that right, bro?
Yeah, but what's more fascinating, Caleb, is the fact that some people will call me crazy, but I've been predicting this for about 5 years. And it's not that I'm a genius or whatnot. It's just if you technically go into 50 years historical market rates, you start seeing the pattern is that almost on an every 10 or so years, these things tend to happen, right? So you begin with the 77, then you go another hiking around the 86, and about the 93s to 97s. It's always there. It was actually, we were late to have this actually spiking process, in my opinion. The last surge happened between 2010 to 2011. So COVID was just the beginning of it, but you had to keep going up. So it really doesn't surprise me. I've been predicting this, and that's why we've been, our message is so strong in what we call, there is support, there's communication, and ideally, what you and I like to call the holistic purchasing engine. It's not just, we don't see coffee like a trade. Also going back to the market, I love to get a lot of calls, for instance, oh, it just dipped down, so it's like 317 today. This is my best opportunity to buy. And I say, guys, we don't operate, this is physical product, we really don't operate or have the ability to fulfill your contracts as if we were stock traders. You cannot just go boom, click, and I appear a lot of coffee in Australia. That doesn't work like that. It doesn't matter if it goes down. To actually secure a deal, you need to call the supplier, get them to fix the price and whatnot, and that could take days. And the other interesting question is, do they have the supply?
That's the exact question I wanted to ask you, man. So I would love to hear it. And if you're comfortable to share with everyone as well, from your perspective, how are you seeing I feel like there's a big emphasis at the moment, and we are sharing this with everyone, emphasis on price, but I'm highly concerned that a lot of roasters in Australia are going to be, they're so focused on the price conversation that we're very quickly, and some are in it right now. I'm having roasters call me this week who are trying to find product that isn't available. I think we're going to be moving towards a quantity conversation. How much can I get from who very quickly in the market? Do you see that being the same challenge coming towards roasters with maybe Colombian coffees?
Yeah, absolutely. I can literally tell you about the influx of inbound leads that we've been having in the last 2 weeks. So I was just telling you when we started this conversation, usually December tends to be very quiet.
That's why you're out in the sun, mate. You're already on holidays and the phone's ringing.
And I just told you, if it's for me, I wouldn't be taking time off this year. So a lot to be done, and especially if we just landing product, it's going super fast. Literally, we're landing over the weekend. It's pretty much allocated. We're leaving very little for stock. And as we speak, we're commencing another trade. So our people in Colombia is literally organizing the next export exercise because demand is not going to ease. Offer is the one that might decrease, but demand definitely not.
I think that's an important thing to touch on, because everyone talks about supply and demand, and we see these, you even mentioned these spikes historically. I take a slightly different maybe view, or a slightly maybe more controversial view, and I'm happy to take that I don't think this spike will result or react in the same way that other historical spikes have. And I say that because of the population of coffee drinkers is massively growing because of the demand that is emerging out of emerging consumption markets like China. We look at the example of Luckin Coffee, who are a very successful and fast-growing thing. Even if, let's say, everyone releases a report tomorrow and says Brazil's going to have 50 million bags, 25, 26. Yes, we will see a little bit of a stable in the price. It's not going to fall out in that alone when we see the growth of these markets. We saw Luckin Coffee grow. They did a 500 million US OU July this year. And at that time, I was shouting about it, bro. I was like, this is huge. Like the market's at 220-ish around then, and they're booking big contracts. And I was like, okay, wow. And they've just doubled that contract in volume. So it was 120,000 tons. They just a couple of weeks ago said, okay, we're going to get another 120,000 tons. The additional 120, did we lose you?
Not enough freaking call. Sorry. There you go. I'm back.
Okay, cool. What I was saying was, like, they sold 120,000 ton for 500 million. They signed a double, so they doubled another 120,000, total of 240, and they increased it by 900 million. So it's a total 240,000. So it's important to understand that.
Crazy, Calivano.
And that is 1.4 billion USD. Basically looked at it and it was like 280 per pound that they converted at. And we're sitting.
I've been trying to
Literally.
look at an article to give me the specific price per kilo or pound that they signed
Close,
for.
close.
Interesting. That was my next question to you. Can you
Yeah. So
provide me,
I
please enlighten me?
obviously I'm not in no, but I've just done the maths of looking at it and trying to work it out. And we'll 240 ton by that roughly. I'll double check my maths, and this is where I'll cut in if I've got it wrong. But basically this MOU from Luckin Coffee is a signal of an emerging market that is setting its price expectations on where the market is today. In Australia and in other like Europe and America, we built our markets on a much lower and more stable price. And I think Europe and US actually charge their consumers a little bit more efficiently than large consumers here. But the nature of this is going to be the thing that holds the market above this level. And we're not going to see this drop out.
Okay. Are you ready for this? So let's, for the sake of the conversation, shall we lock
bro.
in your theory, you said $2.80 per pound that they locked in?
I believe so. Yep.
Roughly. Okay. And now, in fact, and I'm looking here at my trading sort of graph, tells us that Luckin Coffee is pretty much securing at what it was the high point in 97, past the highest point in 86, and almost bearing the highest price that we had in the 2011, right?
Yeah.
The goal for the second thing that is fascinating about this is like Chinese. I deal with them a lot in this life, and yes, they might like gamble, but they're not really gamblers when it comes to business, right? Especially an institution like Luckin Coffee, so aggressive, has to tell us something. You know what people know? They've got all of the resources and tools to know.
Yeah.
To predict the future, and they're saying we're sitting here, and we double within 2 months. They double the gamble, right?
Yeah.
Now, again, for the sake of the exercise, we're going back to the 280, and remember that they dealt with Brazil. So we're not talking Arabica coffee here. Really, well, it's a different indicator, you know. It's like the lock in Brazil. Let me paraphrase. If they lock in Brazil at 280, that means that any other origin, you know, Brazilian is one of the cheapest ones, should be marked above. So locking signing at 280, I wouldn't expect anyone to find any Arabica coffee around the world for less than £8, you know?
Crazy.
So that literally, it sets the market. It sets the new beginning. So the new norm, I think that in the past, companies like Nestle were the ones driving the prices in Asia and whatnot, right? Now Luckin Coffee is driving the price and is telling the rest of the world, this is the new norm, baby. And we can do it. We go and deal with the government of Brazil directly. I'm not in such capacity, you know.
It's
little traders will have that capacity. So yeah, that's the new world we live in. The number two thing that I was reading recently was the Starbucks movement. Have you checked in what Starbucks did?
A little bit. I read about them consolidating their positions in China and Asia, but yeah.
No, it's about the whole composition of their purchasing behavior, right? And back in the day, they used to have, it was something crazy like $2 billion worth of hedging and whatnot.
Yes,
now
I did read that. Yes.
Decrease it, and they went to only 200 million because it's like, what are we gonna do? You know, it's too risky to like sit into something.
It's good. And I think this is an important thing, and you can see, and I think everyone can see when we have a like this, the enthusiasm that someone like yourself and myself have to share this insights. And ultimately, we do not know where a market's moving. We do not know these dynamics in and out. We are only able to make educated and informed decisions on behalf of ourselves and our businesses when looking at a market like this. But the reason we're so enthused, or the reason we want to share this information with the people who are watching, is to allow you to maybe have a moment and go, okay, I've got to go look at this. I've got to talk to my suppliers. I need to talk to my partners about how I'm going to move forward, or whether these are things that you're predicting as well. Because we don't have a magic wand, and I do, but all I can do is work on the information that's provided to me and make informed and educated decisions. And our industry historically has been too siloed to allow that information to be easily shared. So the goal of a conversation like this for everyone watching is to share perspective and insight. Do more research, have more conversations, start a dynamic conversation with your supplier. Obviously, if you're buying off Seb, great. Seb's going to chew your ear off and he'll help you out. I know he will. But if you're talking to any supplier, start conversations about how you're mitigating risk for yourself as a roaster, because we can no longer rely on the market to have excess product to solve our problem as a roaster. We need to have our own defensive moats in our businesses, in our contracting, to protect ourselves going forward. And there's some roasters who think I might be catastrophizing it or maybe making it worse. That's okay. If I'm wrong, you've overprotected yourself if you listen and if you follow and if you look at doing that. If I'm right, you're going to be one of the people who has access to product. You're going to be one of the people who has the ability to set your pricing and actually forecast your margins out to your customers to convert that price into an increased price with a customer. It's just what it is. And it is just hard. I think one thing I want to circle back on before we wrap up, Seb, everyone is using, because a very big component and traditional component that roasters, particularly in Australia, use main blends in their single origin programs. You mentioned a little bit, you touched on holistic purchasing. Anyone who watches me has heard me talk about holistic purchasing. I think it's the most dynamic, efficient, and effective green buying strategy that anyone in the world can implement right now. And that's a strategy that you don't need anything to do. You can do yourself. It's a mentality and an approach. I'd love to know, Seb, from your perspective, looking forward into 2025, what are the best advice or strategies for anyone looking to buy Colombian coffee and looking to secure and kind of in 2025?
Yeah, to put saying, my number one advice is do not wait. Just don't wait. Secondly, be very well informed. I said I hate my life sometimes because I wake up checking on Forex and coffee prices and I go to bed doing exactly the same. Unfortunately, it's my job, but every roaster should be doing it right now. This is kind of like within a day. Things change horribly. And yeah, talk to your traders, and especially for us, going back to your holistic purchasing, that's where I feel that we've been able to help most of our customers, really. And the reason behind it is I've always proposed that they shouldn't be seen as like just a products dealer, right? We like to create plans and we like to work with our clients based on the fact that we work with people in the other side of the world. It's not just a massive cooperative. No. So what we said, there's no one farm that produces a specialty coffee, you know, single farm with core of production that is like your regional blender. And when it comes to holistic is, can you fit within your product lines? Clearly, there's no roaster with just one product, right? You have different layers, different classes of products and whatnot. And how can we serve the different lines from, even if it's possible, one producer? Why am I saying that we can help the most? And I'm seeing it with my clients, because some products will be blenders, that's the core of your production and of your business. But if you allow us to work as well on micro lots, single origins, clearly that's where us a little bit more of money. And what we're using is the profitability is better. Obviously, the quality is much, much better. But what we're doing, and this is working, is we're leveraging some of that profitability on those good lines to put it down and send it back to the regionals, to your blender, because we understand that is the most important part of your business, and we want to make it smoother, you know. That's purchasing has helped us a lot, you know. You can sell you a bag for X amount, and through holistic purchasing, I could be reducing on a large contract 50 cents, sometimes even $1, than the mix of product that you're taking from us at specific times. Also, because, as I said, help us plan. Planning is super important, because when you forecast, you know what's going to happen, and wasting time, and time is money. So
I think that's a point. As a roaster, you mentioned having in your role waking up and looking at these market trends every day. As a roaster, if you secure your product and your core procurement strategy for a significant period of time, I'm recommending like aligning our purchasing with Huckles, and obviously Colombia is quite consistent in that harvest, but trying to align those. You have a period of time that you can actually have consistency in cost, that you can communicate, and you can actually, margins will be covered in that time. Where if you're waiting and checking, it's making it really that you're going to be able to make the right decision at the right time, and the second guessing. If you can afford it today, secure it. That's my recommendation. So I think what you touched on there about holistic purchasing is really insightful. I think one other thing that I'd like to touch on before we wrap up is, as a Australian roaster to 2025, are you hearing anything about like quality of production and insights from Colombia? Anything that you've heard or any insights you'd like to give to roasters about production quality or anything like that we're hearing from the market?
Yeah, don't expect it. I've always said this: whenever there is a price hike, we get to see the worst product in quality. And why? This is very simple, people will it reduces my effort to give you whatever, like the easiest coffee, that I can get quick, because I'm cashing on anything I can get my hands onto. So it's sad. It's the purpose of the specialty sort of movement, but it is a reality, when there's higher is lower quality, unfortunately.
Yeah, I think it's an insight for roasters to hear, because hearing it straight from understanding that this is the challenge. It's going to take time investing in your planning, investing in working with your supplier and your kind of network to secure you the right quality. It's not as easy as it used to be to access quality. When the price was low, paying that premium was very incentivized. When the price is high, those premiums are not as incentivizing right now for producers. So it's going to take more work to find that quality product.
Yeah, and also what I wanted to add is, we've spoken about how we're living in a new market thanks to lock-in and whatnot. But what I feel and what we're expecting based on our modeling is, yes, we reached the ultra historical highs. I knew it was going to happen. Now it's calmed down. Obviously, there was a little bit of panic. But one thing that I reckon is going to happen is we might be closing the quarter in December between the 310s, 320s.
Yeah,
that's going to be the number. And then it might just hike up a little bit more. And I reckon even within 12 months, we'll still be seeing the new norm in like 340, roughly 330.
Yeah.
So that's where this, as we're trying to communicate that to our clients, be prepared for this, trying to help you from now. But that's what we're going to be seeing. And I just hope many defaults, honestly.
Yeah. And I think
that's market.
That's the great place to wrap it up. So Seb, thank you so much for your time. Everyone watching this, I'll put some links in so you can go and follow along. Seb mentioned some videos and resources that he's been producing and providing for everyone. So I will link those as well. This will be on the YouTube. It'll be in Facebook, Instagram, all the places that I somehow figure out how to get it to. But thanks heaps for your time, Seb. And once again, everyone, if you guys want to keep up to date with more conversations like this, more insight like this, be sure to follow along at our YouTube channel. Our Roaster Roundtable series will probably be kicking off even more as we go forward. If you have questions about anything we discussed, comment below. Seb might not be able to see them straight away, but I sure will, and I'll be sure to take him to him, get some answers, and we can continue these conversations on, because moving forward in this volatile market, it is dependent on transparent and open communication. Ask questions and we will give answers, guys. That's all, team. Happy roasting. Until next time, take care.
Just before you go,
we're not done. Go.
Let's find the price. Let's find the pound price that lock-in deal.
I'll do the maths right. Leave the recording.
That would be
this.
Awesome. I'll make a post out of this, if we have. And the second thing that I'll be saying could have 2025, right? It's what will happen, guys, if lock-in goes next door to Colombia and does exactly the same thing.
Just converting it now. What does it work out to be? 265 USD per pound, roughly. Alrighty, guys, so that's a wrap on that episode. Big shout out to Seb. Be sure to go follow along with FarMore to keep up to date with everything happening in Colombia. We will be sharing some of the updates that Seb's got, and I'm definitely going to have him back on later in the year to give you more updates about what's happening in Colombia. Just to clarify, we did do the maths, and it is sitting around that 265 USD per pound that the Luckin contract equates to. So it's just important to understand that. We showed the working in the pod, which is always good. But guys, be sure to follow along. Leave us some comments below. If you have more questions, I can take them back to Seb, or if there's anything else you want us to cover in the podcast. We do have a really exciting episode coming out next week, so be sure to follow this if you're on Spotify or YouTube and keep up to date with everything. Happy roasting, team, and we'll talk to you all soon.